Hello, everyone. Happy Tuesday. Hope everyone in the U.S. had a good Labor Day and overseas people had a quieter trading day and a wonderful weekend. How is everyone doing? Good morning, Sterling. People still filtering in. Sterling, thank you for putting in all the Waller information. It's hard to determine monetary policy lags. That's why they're paid the big bucks. And they use this is good. I bet you this comment will come back to bite them. I'm not seeing anything in commercial. I think that was real estate that will threaten the economy. Well, we're gonna see how that turns out. A options 22. Welcome back. Good morning, Jacob. Waller completely took opposite sides of the same arguments in two of the above statements. Yeah, I saw that too. I mean, it's absurd. They literally talk out of both the sides of their mouth. But they're still speaking of the Fed. 15 days, 4 hours till the next meeting, which looks like a guaranteed pause at this point. And even the November's dropped back, so it looks like at this point, the market's pricing the pause through March. But since we had yesterday being a holiday, we're starting on Tuesday today. We got the 9 a.m., 30 minutes after the cash opened, the economic optimism numbers coming out and factory orders ex transport, factory orders month over month. So not a lot of major data. Tomorrow, our Wednesday, we have ISM services is pretty much the big thing in Fed Beige Book. Those are the two big things tomorrow. Thursday, again, unemployment numbers, as always. Remember, for crude traders, the EIA numbers, since we had the holiday on Monday, are shifted from Wednesday to Thursday. And then we have some more Fed speak in the afternoon. Fed speak on Friday and very little information. So overall, it's a very quiet week in terms of releases, economic releases. So far this morning, a little pullback, except for Oracle, some healthcare rallying. So it looks like an energy moving up. But with the healthcare rallying, it looks like a little shift to defensive stocks today, more in the healthcare sector, financial utilities, real estate, consumer defensive, still down a bit. And when I say defensive, that's a rotating in from more riskier assets to generally risk off assets, which are things like healthcare. So that's where we sit. We already looked at Fed Watch, fear and greed in greed mode. We'll have to see where we're going to open today. The current market valuations finally got posted for August, and we're still overvalued, fairly valued, overvalued. Recession indicators are screaming very high still. So, we'll have to see. That can take a long time to play out, though. In terms of earnings, also very, very quiet. Tuesday, today after the close, Zscaler. Wednesday, really not much. Express, GameStop, if that's still a thing, Dave and Buster's. Thursday, SAIC. Toro, Friday or Thursday after close, DocuSign, Restoration Hardware. That'll be interesting from the higher end consumer. Friday, Kroger, from an inflation and grocery perspective. So very, very quiet week in terms of earnings, winding down, completely winding down. Let's see who else has popped in. Hey, Alan. Good morning. So what else? Crude just spiked. We'll take a look at that. They're extending cuts. Thanks for all this. Thanks for putting in all the news, Sterling. So right now, one thing I'm keeping an eye on, this little channeling pullback. So far, we got a little flagging channel pullback area. The key area I'm watching, if we do continue to pull back, remember, daily cycles are rolling over. But the key area, we've raised a stop on the double. The invalidation point is a close now before 44.24.25. But the key area I'm watching is this 44.70 to 44.85. If it does pull back, we also have the cross of the rotation zone. So a lot of algos that buy the pullbacks into this area. Just that's why I look at the rotation zone. But that's 44.85, even above that. But I'm watching 44.85, the trigger point of the wick from the double bottom and to the candle body, as I've talked about before. So that's my bigger pullback levels I'm watching if we continue to pull back over the next couple days. Other than that, I'm keeping an eye. Minor is if we start getting above about 45.25, but we really have to start getting a close above 45.36 or some significant momentum above there to really confirm that the rotation is up from the flagging pattern also. Let me just take this off. This is the weeklies. The reason I'm putting this up, we still have weekly cycles heading up, so we have a mismatch in cycles. We have weeklies heading up. Remember, after we caught back on the weekly rotation zone a couple weeks ago, we've had 2 weeks up, hitting that first target on the double, and we also still have daily cycles rolling over. So, does that mean it has to be a bigger pullback? Not necessarily. It could be more of this flagging sideways pullback. That's why I'm really watching on a closing basis 44.70. So that's key. Other than that, the targets, the upside are still the same. Also keep in mind from the S&P point of view, you see right here, 62.5 harmonic on the daily. We did not close above it yet. We did not close above it. So we don't have the other 87.5% rule kicked in yet. That's why I'll be watching on the short-term basis, 45, 27, 75. If we close above there, then I'll be watching for a reconnection with that 87.5 area. But since the first target is still, or the second target for the double, and the next harmonic target higher is virtually the same place, that is a key level from my perspective to at least possibly take some partial profits and definitely raise a stop again. NASDAQ did close back on Thursday above the 62.5. So far, it's pulling back a bit. The key area I'm watching on this pullback, this 15,418 area, which was virtually 2 days low so far. And then the next area is if I could click on the right thing, the candle body from right before the double, which is right in the top of the rotation zone, so about 15,333. So that's what I'm keeping an eye on there. There's not a great flagging pattern here. It's just sort of stair-stepping. Really is trying to hold this key support. So those are the levels I'm watching on the pullback. This has not hit the stop reduction yet on the double. So we this one has closed above the 62.5, but has not hit the stop on the double. So I'm still watching for, after a pullback, some kind of rotation back up. Same thing with NASDAQ cycles at the top on the daily, but the bottom and still moving up on the weekly. Next key areas I would not ignore, and I'd just make the stop reduction for the double, even though it's officially 15,734.50. I'd still be personally utilizing 15,699.50, where it's the 75% harmonic. All right, so we're going to keep an eye on that too. Dow, no close above the 62.5, so that's the key level I'm still watching on the daily, not just for today, but for this week. 35,175 is that level. You see bouncing off it last week, pulling back. The key support areas between about 34,720 and about 34,575. Let's get to some other stuff. Russell, which did complete the double. Russell did complete the double and pulled into the 50 to 62.5 rotation zone and pulled back. The key level above that double was 1932.5. Roughly, we spiked up there on Friday. The key closing level is 1948 on a close to invoke the 87.5 rule. The pullback, if we start breaking down below about 1900 though, having been with the double being over, that's not a good sign for the Russell. And daily cycles at the top, weekly cycles moving up. But Russell, last week was pretty strong, but Russell overall is just caught in this big trading range. So besides that 1900 level, if Russell eventually breaks this 1830 area, watch out. That's the key thing to make a note on your chart. VIX, a little pop up this morning, but still in the lower consolidation range. If we start breaking through today's low, I'll start watching more so in choppy rally mode. If we start breaking above 1480, I'll be focusing more on the significant pullback mode. DAX, which has not hit stop reduction yet for the double, pulled back. Did it invalidate anything on that pullback? No. You did not get a close below 62.5, and you did definitely not get a trade below the 15,617. So everything is still in place with that. So nothing shifted with that. So still, although it does look, I mean, it's flattening out with the rotation zone, trying to get something going, but we'll see. We'll see with that DAX. The notes after coming back to the weekly rotation zone last week, rolling over. So it's going to be interesting to see where the key support level is on this after it was essentially a corrective move back up. So my key level on a closing basis is 109.26. We get the close below that, I'll start watching for the bigger pullback and possibly a more significant bottoming formation. The yields, which pulled back to the weekly rotation zone, rotating back up. Looks like that's breaking out of this little channeling thing. The key level on the 10-year yield is 4.243. The 10-2s, bear steepening, coming back up to this high area that we tested at the beginning of August and the middle of about the third week in August, and then found some resistance, but this could be kicking back in. And again, minus 52.5 basis points is where I'm watching for this to really take some momentum up higher for bear steepening. Dollar pulling back a little after, looks like Waller's comments, but still, you have a rotation, catching on the rotation zone in the 200, rotating up. Yeah, technically this double top's still in play, just barely. But the dollar wrecking ball is still in full force. So, little pullback. If it does pull back going into the open, you could sustain the market. So for rally mode, other than that, I'm still watching for some higher prices in the short term. Dollar index, though, is topping out on the weekly and getting that topping area on the daily yet. So at least we could get a more of a pause and choppier price action in here. Crude, double, clearly off the table. Crude, Sterling put the comments in with the Saudi stuff. The next key target, we hit the minor targets. That's done. My next major target, still 88, about 70 to about 88.70. We have a cluster right around there, 88.50 to 88.70, and then 92.60. So pulled back to the 50, pulled back into the rotation zone on the weekly, strong rotation back up last week, and looking, I mean, this is the highest it's been. This is going to get interesting also. This is the highest it's been since last November. So keep an eye on crude. Good morning, Anissa. Good morning. Sorry it's not going well, Richard. Always frustrating when stuff like that happens. Sterling putting in some seasonality trades. Thank you, Sterling. Natty Gas still caught in this upper basing. Natty Gas pulling back a bit, but keep an eye on about 248. Gold pulling back. Gold still no close. Still no close above the 62.5. Rejected on the daily basis. Rejected there 3 times and now rolling back over. So going to be watching the key support area in gold now is right around 1948, 1950. Silver also pulling back after hitting the key resistance areas. So taking a breather there with the yields turning back up. 10-year still holding the rotation zone on the JGBs. And the yen still powering up to hit that 87.5 rule. 148.85 still in play. Pull back. Is this a double top? No, it's because of this sideways area here. The key area still is this 144.70 on a closing basis. Would be putting in at least a confirmed short-term top in the yen, but moving back up, still holding the rotation zone. So target still 148.85, and then if it goes beyond there, 149.50 area. Euro breaking down. Looks like just was the potential double top. The dollar's nearly off the table. Looks like this is also heading off the table and breaking a very key channel. See here, breaking below the key channel. So now back below the 200. I'm definitely watching over the next few weeks, even on rallies, rotation zone rollovers here, and a retest now of about 106.50. And then probably back down to about 105, somewhere in the mid 105s. There will be bounce rallies along the way, but overall, nothing bullish in the euro right now. The pound, still watching for this to break down and tackle the 87.5 harmonic 124.12 with the 200. So, still watching on any rallies for rollovers. Bitcoin, after completing a little mini double, back into the key support area. Still keeping an eye if it does get a close below 24,750 on the larger basis. Spiders have hit the second target. Hit the second target. First and second targets hit. The stop level now. The stop level for the spiders is back on a closing basis 440.76 and a trade through basis 438.18. Those are the worst case stop levels. I'm watching for a catch even before that. The key levels I would be looking at is roughly about 450. And then we break below that. There's some minor significance at about 488.30, and then major is back at 446.15 to 446.50. The next target to the upside is still 456.44 and then 456.14. And you do have a gap left behind here still. You can see a gap left behind back from the 1st of August to the 2nd of August. Hold on 1 second. There we go. So still cycles getting to the top on the daily, turning up on the weekly. So still a mismatch on cycles. So we could see definitely potentially pullback, choppier trading this week overall. The Qs, first target hit on the Qs. Next target is 383.36 to 383.82. The Qs also closing above the 62.5, so we still have the magnet prices higher besides the double. The stop levels for the Qs are now on a closing basis 364.51, trade through basis 361.24, and those are the worst case stop levels. Key pullback areas, I'm keeping an eye going into the open at right around 376.20 to about 375.40. If we drop below 375.40, my next key level isn't until about 372.65. Other than that, Tesla hitting into the key rotation 62.5, 50 to 62.5, and moving down. Still watching for the rollover plays in Tesla. So, unless it closes above 266.69, I'm focusing on rollover plays in Tesla. Rollover setups. Key level to watch is about this 240 level, this little 240 area on the pullback basis. Pre-market trading 243.50. NVIDIA, double is still potentially in play. We have to get through the rotation zone first. That's really about it looking at NVIDIA. What else do we have? GIS has triggered a weekly double top that has hit the first target down and lost it 200 week. RSI is looking oversold at this point. Where would you look for another rollover level? Let's take a look. GIS. General Mills. the double, which has been hit, and you are completely correct. The first target is hit. The is closed last week below the 200. Let's look for where some key pullback levels would be on the daily. Key pullback levels at this point. If it does, now remember, it doesn't have to pull back. It's still not over. It's getting oversold. Cycle's still a little ways to run. It's getting to weekly cycle low area, but not turning up yet. So this doesn't have to bounce just yet. But on a bounce, the first areas I'd be looking is about 68, between 68 and 69, if it does get the bounce at this point. Earnings coming out September 20th. So, isn't that the Fed meeting day? So there you go. Now, could you get a little bounce and some covering going into earnings? Sure. What's the next key target is on this? On this, it's about 63.66. I'm just seeing where these lows are because these are going to be very key lows. These are very key lows. So, I would not be surprised on any further weakness to see some support coming in right in front of 65, 65.05 area. So do not ignore. I will pay attention to these lows because it essentially formed this two bottom right here. I don't think it was a full double, but it was a two bottom that had buying pressure and then sustained a pretty decent rally off of it. So those are all the levels I'd be looking at there. I don't think inflation's fully done either, Richard. So that's where that sits. All right. All right. So I am at least prepared for the shortened trading week. I hope there's some of this information helped everybody else. Looks like we're with the dollar pullback. We're getting a little bounce potentially into the open. So I'm going to be keeping an eye on that. Just remember there's the flagging consolidation pattern here. So short term, this 45.30 area will be key for me to watch going into the open. With that, you're welcome, Sterling. I hope everyone has a fantastic trading week, and I will see you all later. Bye for now.